Hey guys, Silver Dave here. I'm going to come to you with a bit of a breaking news. This news was a little bit underreported, so I'm just going to do a short video today to go over some of the things that has been happening over the weekend, okay? Normally, nothing happens in the financial world over the weekend. However, just on the 4th of December, after trading hours, there was a large sale that happened. And I'm going to point to the significance of this because recently we've hit all-time highs for the Dow Jones Industrial Average, and we broke 3,000 for the Dow Jones Industrial Average. However, you have to realize that most of the buying of the DJI and the shares and the S&P 500 and all the shares in these ETFs is done by ETF funds, such as the Vanguard 500, such as the Spider Fund. So what happened that is so groundbreaking over the last few days? Well, $7 billion worth of S&P 500 ETFs from the Vanguard Fund was withdrawn, right? This is a cash outflow. Somebody sold their position directly. Well, it wasn't exactly a market sale, but it went directly to the market maker and they exited their position in Vanguard. Is this a lot? Is 7 billion a lot? Well, yeah, 7 billion is about 4% of Vanguard's S&P 500 assets, right? And this is what I think might be more a tip of the iceberg because we've reached record high valuations, and in the S&P 500, currently, most of the companies, I would say they are overvalued, but they are not as overvalued as what is going to happen soon in December, which is Tesla will join the S&P 500. And I do have a small, I believe that Tesla is overvalued. And it's not just me who believes it. Even Elon Musk believes that Tesla is overvalued. I mean, if you just read the article that came out on the 1st of December, he wants Tesla to focus on profitability, right? Why does he want to focus on profitability? Well, the share prices are to the moon and the company is not profitable relative to its valuation, right? If it cannot sustain such valuation on the long term, it's not just I think it. I think also Elon realizes that you cannot have a company valued in the $100 billion and really not generate any profit. I mean, yes, a lot of it is future expectation of valuation, but that future expectation has to be realized to justify the $100 billion valuation. Maybe Tesla, even with a future taken into consideration, is only worth 50 billion. If you look at its revenue sources, it's not worth $100 billion. It's very difficult. There's no other company that, there's very few companies that you can value at 100 billion and decide that, revenue doesn't really matter. But then you have Amazon, Facebook, and so on. So that might be up for debate. But Tesla, who is an automaker, it's not exactly very common for automakers to not have any profitability and then be valued at such a high level. A lot of the early technology companies, yes, people expected them to be game-changing because it was something that didn't exist before. E-commerce, if you think about it, before the 1990s, before 2000s, it's just something that did not exist, right? Deliveries to households was not something that happened commonly. Amazon changed that. But what about Tesla? Tesla joining the S&P 500 could potentially crash the S&P 500. I think a lot of people are speculating on Tesla. And, there's a lot of things in the S&P 500. There's only a few things in the S&P 500 keeping the ETF afloat. So the fact that somebody decided to sell 4%, the equivalent of 4% of the Vanguard S&P 500 fund, it's a big move. It's a really, really big move. I don't know if you saw the movie. There was a movie about the 2008 crash called Margin Call, and it was more or less in the after hours. Some analysts were working on their models, and they saw that that if the mortgage market went down, I don't know, it was like 3% more, the fund, their whole company would be insolvable. It's potentially, I'm not saying this case is, but it potentially is a sign that some major investors are realizing that based upon how much the ETFs are valued at, which is extremely high valuations, if there's any adjustment on the downside, they could potentially be insolvable. And that would be a big problem. So the smart money is moving out at this moment. I think that's kind of what happens. Another possibility is that, some people are deciding to sell and they don't want all of the ETF. They only want parts of it, and that they think going forwards will be healthy. So they're preemptively taking their money out of out of the ETF. This is a crazy outflow. You look at the chart here of how much, what are the trade volumes, and it is a humongous trade volume of outflow. 4% of the fund. When cash flows into an ETF, a market maker gives the issuer more funds of the underlying asset in exchange for new shares to meet demand. When the money is taken out, the fund typically gives the market maker the shares, and its shares being sold to the market maker, and then typically cash or the funds, the underlying assets, are given to the original owner who redeems against the ETFs. So maybe some of these people believe that the ETFs could potentially become insolvable because of what might happen soon. Yeah, that is a possibility. I think what will happen to the gold and silver market is we are looking at a financial cliff soon. And I believe they call some gold analysts are saying that we're going to head into a new gold and silver super cycle. And I was looking a little bit at what is a gold and silver super cycle. And essentially, I think every single 8 years, right, there is a bullish uptrend for gold. And that the trend lasts roughly 8 years. I would say that the last trend started around 2002, roughly 2002, 2003, and it went all the way until 2013. And then afterwards we had a downward cycle, a cooling off period, and then right now we are potentially at a new start of a new cycle where we were at 2019 and we're going into a new cycle heading probably until 2022 to 2024, right? And then we might see another downward cycle. That's, I would say, a long-term analysis. Of course, you can't know what happens in the long term, but I think there is a lot of supporting evidence that says that, we might be heading into another strong bull cycle. And if you look at how the bull cycles happen, is during every single bull cycle, there are periods where you drop below the $2,000, the 200-day exponential moving average. And typically, those are your buy points. Those are points you want to buy at. You want to buy at the 200-day exponential moving average. And typically, you have quite strong bounce backs during the whole period. And if you buy during the 200-day exponential moving average or around there, it's a pretty good deal. If you're basically trading and you're stacking during that period, you're getting a pretty good deal. It's only near the end of the cycle that if you're stacking at under the 200-day exponential moving average, you're kind of not having a great time. But I would say this time, we are currently seeing potentially a new super cycle, right? Every time we dip beneath the 200-day exponential moving average, we see quite a strong bounce back. And we are seeing that right now. Now, the question is, will we bounce back to 2000? It doesn't have to. As long as it goes around 1900 and it slowly grinds up, we're good. and then potentially we will have another crash, right? I think right now at the 1800 levels, gold is quite attractive. Platinum is still attractive. Silver is also relatively attractive. I think the silver cycle it's a little bit different. It's a much longer cycle. Maybe we are in a new long-term upward cycle. What will happen is silver tends to be relatively more volatile. Excuse me. So we might see downward turns, upward turns, but overall, I think the trend is quite positive for silver too. Platinum, palladium, I'm not too sure. The palladium market is it's complicated. It's very industrial oriented, and I don't have any inside news. The gold market is very currency oriented. I would say silver is 50-50, and platinum is 40%, 40-60. But platinum is just it was so undervalued for such a long time. I think for a long time, all of the speculators have been chased out of the platinum market, It's not the most attractive metal to invest in. It was in a bear market for a very, very, very long time. I would say since 2008, it's been in a bear market. It's never recovered since 2008, and we're close to the historical lows. Historical lows were simply $800, and we're at $1,000. We are very close to historical lows. If you think about it, $1,000 barely breaks this part, right? Like, yeah, we're near historical lows. I would say if we were to move forward, I think platinum might pull back in the next crash a little bit, but I don't know. It might pull back a little bit. I might buy into it some more if it pulls back. I might add it anyways. I plan on adding up to 3 ounces of platinum. I already have 1 ounce. And I kind of missed a little bit the recent one, but I added, I think back in right after the crash, I added around $850 an ounce. I bought some platinum. I did have to pay a premium for physical platinum. Then I was thinking of adding here when I got my paycheck, but but right after I got my paycheck, platinum just jumped, and I was like, ah, crap. But anyways, I'm thinking of maybe even adding a little bit of platinum. Yeah, gold-silver ratio, quite interesting. It's been going downwards. I think silver is we're seeing quite a strong bullish move from silver. And it's looking as if it's going to become stronger. But gold, stable, upward, slow trend. Very safe asset. Platinum, also a very undervalued asset. Silver is, it's somewhere in between. There's some reasons why I don't like silver. Some reasons why I really like silver. I like silver because it's cheap. I mean, you can pick up an ounce for $24. It's really cheap. There's a lot of silver too, so there's a reason why it's relatively cheap. Platinum, same situation, right? Platinum is super cheap. Platinum is so rare, but it is so cheap at the moment. And yeah, I think today, if I look at the news and I'm basing upon like what I think might happen starting next week, is we're going to see more downward pressure in the stock market, in the currency markets, and we might see some buy-in in the currency markets because it's so low right now. It's attractive to buy dollars, but they're buying dollars in hopes of waiting for a dip in the overall market to buy into the markets. And I think starting from this point on, you have to be quite careful about what you're going to buy. But I think gold and silver are some of the best insurances in a downward, in a downturn. So yeah, I'm going to pick up more before the end of the year. In December, I'll pick up some more gold and silver, and yeah, that's my investment strategy. And so breaking news: $7 billion pulled out of Vanguard, 4% of the fund. That's a lot of movement. It was a little bit under the radar. Very few people are reporting this. I don't know why they're not talking more about it. It's a very big move. Thank you for watching. Hope you liked the video. I'm going to try to do more daily content. I've been working on my my machine learning models for gold and silver. And right now I'm working on the crash model. Once I have the crash model, the predictor model, I'll be able to do it through different assets, which include gold, silver, and platinum. And then I'll make them publicly available so that people can use it. And also you can run it on your own computers because I'll be putting on into containers, which means that if you have Docker, you can deploy it anywhere you want. Anyways, thank you very much for watching. Hope you have a great weekend. Stay safe, stack in good health. Dave out.